Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special economic weather report brought to you in association with the BNZ. Today we talk about a speech from Reserve Bank Governor Alan Bollard. He's been speaking at the Local Government New Zealand conference in Dunedin about the economic outlook and about interest rates. And he's gone into a lot of depth about why he thinks interest rates should rise in the next couple of months. You might recall last week he came out with a reasonably brief statement saying that interest rates needed to rise in the coming months because the global economy was starting to pick up, particularly in Asia and Australia, and the New Zealand economy was starting to pick up too. But in the speech today he has been much more specific about the need to remove significant stimulus to the economy. Remember, the official cash rate is at 2.5%. That's a record low. And Alan Bollard made it clear in the speech today that needs to rise. He didn't say by how much or when, but he did say he agreed with what the market was saying, that it would have to rise within the next couple of months by small increments over the next couple of years. He went into quite a bit of depth about how the economy is going and what's different this time in the recovery. He pointed out we'd been through the worst financial crisis since the Depression and that the economic recession had been the longest since the Second World War. He pointed out that the recovery this time was a bit different, that households weren't spending so much and that businesses were being very careful about their borrowing. And he made a point of looking at this chart here, which shows the amount of equity withdrawal that's been going on in the last decade or so. This is where people use their houses a bit like ATMs to take cash out and then to go spending it on houses and cars and flat screen TVs and holidays. And you can see here in the chart where the line goes well above the actual amount of investment in housing and goes to the growth in mortgages. And that gap, that's equity withdrawal, and that's what we saw during the boom from 2002 to 2007. On the other side of the equation, the last year and a half or so has seen significant equity injection back into houses. So instead of taking cash out of the ATM machine, we're effectively putting it back in a variety of ways. Some of us are downsizing, so we go from one house to the next, we repay some debt on the way, or we keep repaying our mortgages at the rate that we would have done if interest rates were at 9 or 10%, but they're actually only at 6 or 7%. And that means we're effectively repaying debt. And Alan Bollard says this is one of the reasons why the economy isn't taking off quite so much this time around. He also points in this chart to the real slowdown in bank lending over the last couple of years. This is all because banks don't have an awful lot of spare capital at the moment and they're being careful to reduce their leverage. They're also under pressure from regulators like the Reserve Bank not to put so much money into lending. And that's part of the reason why we've seen funding costs increase. Banks have been competing hard for term deposits. And that has pushed retail interest rates up slightly. Alan Bollard has also pointed out that this time around interest rates aren't likely to rise so fast or so far. And that's reassuring for those people who are on floating rates. I'm Bernard Hickey. That was a special economic weather report on Governor Alan Bollard's speech to Local Government New Zealand in Dunedin about interest rates. That was brought to you in association with the BNZ.